Hi, welcome to this video day, which is on the 24th of March. It's Sunday. We're just going to be looking at our favorite trade setup today, which is to trade with smart money at important market turning points. Now, in today's video, I'm going to feature USD MXN. We're going to do our technical analysis on the chart in a moment. We're also going to be looking at our favorite tool in Forex trading, which is the COT Net Traders Positions, which is totally free. Any trader can use it. It's got a massive advantage if you do use it. You can see where actual smart money is positioned in the markets, not opinions, but actual positions, okay? And it's a huge advantage because what you can look for is smart money to be positioned one way, and smart money is commercial hedgers, which I'll go through in a moment, and they're opposed by speculators on the other side. When you get a big divergence between the two groups, you have the odds in your favor that prices will break in favor of the commercials, which I'll explain in a moment why and give you some data. Now, in terms of the chart, we are going to go and take a look at it right now, but please do keep in mind, it is my view as of this moment in time. It can change in line with the market conditions. If you want all our trading techniques, our COT analysis, and our daily technical analysis of 14 major Forex pairs, you can click on the link beneath this video and get live access to our member center. Right, before I draw my levels of entry, stop and target in terms of USD MXN, we're going to look at the COT Net Traders Positions first. Just on the COT Net Traders Positions before we go and draw levels of entry, stop and target. Now, I've made a point for new viewers here on the COT. It's always the foreign currency first. So we're looking at MXN USD. We, of course, trade USD MXN. Okay, so the other way round, and we'll put the chart the right way round in a moment. This chart is just to see what commercial hedgers, the smart money, is doing against large speculators, and I've highlighted three divergences. What we're looking for is the smart money commercials to go heavily against the large speculators. When that happens, it will normally break in favor of the commercials. Now, this is not a timing tool, okay? We have to time technically, but the divergences alert us to the trade setup. Now, if we look at trade setup A, you can see the speculators very long the peso and short the USD. Commercials short the MXN and long the USD. Big divergence. We peak out and we see a nice move to the downside, okay? B, it's a smaller divergence, but again, it goes in favor of the commercials. This week, if we look at the divergence, the specs have gone above this divergence A. Really big buying, commercials really big selling, and the peso has come off. So we're expecting more selling of the Mexican peso, so the USD to go up on the MXN. So the commercials really indicating that this should follow through. How far could it follow through? Well, it could follow through all the way to chart lows. Now, obviously, this chart is the wrong way round. I'm going to reverse it the right way round, and we're going to draw our levels of entry, stop, and target. All right, we're on the chart of the USD MXN. Chart is obviously the right way round now, and you can see, obviously, the USD is pushing up on the MXN. Speculators heavily short, commercials heavily long. Now, in terms of the COT data we've just seen, I just want to go through these 5 points because they're very relevant to the way they're going to view the trade setup. Why are the commercials so long? I'll come to that in a minute, why the commercials are so long the USD. But point number one, the long spec Mexican peso position or short USD position is at record levels, okay, since the COT first started. Now, just for regular viewers, although that's not a record divergence between speculators and commercials, the fact that you've got specs as long as they've ever been points to more USD strength, because the specs are going to think, or I think, are going to bail out on stop. from the start of December, this is very relevant as well, when the market began to price out any Fed rate hikes for 2019, the Mexican peso is the best performing global currency. You can go and look it up. It's the best performing currency by far. So it's very overbought as well. And speculators have made it overbought. And if you look at point number 3, the only reason it is so overbought and speculators have come in and bought it so hard is it's got an attractive carry trade. If you sell the USD on the MXN, you pick up a nice interest rate differential, possibly capital appreciation as well. And that works well in low volatility. Okay, if you look at the chart, big move down, well, you're making capital appreciation and you're picking up the extra interest you get as well on the carry. Even when you're going sideways to a little bit up, you're cushioned by the carry. Speculators then sell it down too hard, and then the rebound is starting. Now, my own view is that, in terms of point number 4, it is all to do with carry and low volatility, why speculators are so bullish the peso. The economy is not strong. I'm not going to go through all the points of why here, but it's not. It's only the carry and low volatility that makes the peso attractive. But that's changing because you're seeing an up move in volatility in global financial markets. On Friday, risk off started to gather pace as the US bond market simply points to a recession. So you've got the market, bond market in the US pointing to a recession in the US. You've got problems all over the world with slowing global growth. Traders are going to become more risk off. That means they're going to get out of these carry trades. And I think the USD could go significantly higher. And the commercials see this, and that's why they're so long. Now, I said it in previous videos, you can just trust the commercials if you wish, but we like to know the reasons why the commercials are bullish. It just gives us more confidence in the trade. Now, in terms of our trading in this, fell down heavily here. And here, very dovish Federal Reserve. Everyone's saying the USD is going to keep going down because the Fed are pointing to no more interest rates. Well, if they're pointing to no more interest rates, then there's a reason. Things are not good in the global economy, and the US economy could face a recession. We came off the low, okay, and we decided to buy. And we only want a bit of confirmation here. It's one of our favourite trade setups outside of an outer Bollinger Band on high volatility after a big fall. We just want to buy back within the band. And that's what we did. This tail doesn't get to that tail. And we get back in the band, we will buy. So there is our buy point. If I can just get my line straight. Why can't I get that straight? There we go. So we're now long. And then we get the nice push off, which has given us a reasonable profit so far, a nice profit so far. And now we're coming up to a critical level. And the critical level for us is if we're bullish of a currency pair, we always want to see this 20-day moving average here, the mid-Bollinger Band break. So this will be the entry for fresh positions, clear of the high on Friday, looking for follow through and specs to cover on stop. Now, in terms of you coming in fresh to this position, you can buy a pullback, but breakout I think is a high odds trade. And I think now we've covered 19, that should provide support for pullback. So we're going to bring our stop up basically behind the 19 level, not too close though, it'll probably be something like 18.95.50. Give it a bit of room, okay? Because that will give us some profit on our initial trade. And if we break higher, we'll probably add actually. The setup looks really good to us. So if we break out, where are we going to go to? Well, here, this is 1964. That's the sort of technical resistance, okay? But these points here point to a big move. So, yeah, it's big money and speculators covering out. So I think we're going to see a really big move. From my experience of the COT, I think we should easily get up to the 20 level, and we could even run on to chart highs or even higher longer term. Now, if we take the risk reward, just coming in on a breakout and stop behind this level, well, you've got well over 4 to 1 to there, and you've got 7 to 1 to there. And you need the COT to have those ambitious targets. You can't see that from the technicals alone. But I really like the look of this trade in terms of risk to reward. Obviously, we came in early. We'd seen the COT divergence the week before and thought it was worth a long trade back within the band. Way the COT looks this week, looks like a breakout could occur. If it does, it's an opportunity to get long. And I think the risk reward looks really good. And in terms of this pair, I'd like a good trade out of it, actually, because it hasn't given me much this year. I have tried long trades like here and here, but really, yeah, stopped out for minimal profit, and the carry basically and took away our profits. So this time around, I'm looking for hopefully a really good move in USD MXN for me. When I say I don't mind if I'm wrong, I don't quite mean it like that. I'd like to be right, but the risk reward is so good to this trade setup for me is always worth going with. You're with the smart money. The smart money tends to be right about the big turning points, the divergence, and the fact the specs are a record long. Makes me very, very bullish. We shall see in the week ahead. It should be a very volatile week. I think, which I've covered in our weekly forecast. You can look at all the other pairs that I like the look of, but I really do like the look of this one. So that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.